Hey, g'day everyone. Welcome back to another episode of Spark Your Fire. This is the last episode of 2024. So as our usual traditions, we are going to go through a wrap and do a bit of scorecard in terms of how we did in terms of our predictions last year. Look at John's face. I love it. I love it.
Squirming.
Don't worry, you're not the only one that's going to get scored. I'm going to get scored as well. So I'm in an equal position
Oh,
as
I'm
you
in good
are.
company.
Basically, got tummies at the moment. It's rumbling, butterflies going. So who knows? But anyway, we'll do a bit of review on that. But John, look, fresh out of data sets, unemployment rate dropped to 3.9%.
Yeah.
Just then. So with a weak economy, weak GDP last month, but a strong, very strong unemployment figure coming back in, what do you think is going to be the impact in terms of the interest rate decisions next year? Do you reckon it's just going to be longer, higher for longer at this stage? What are your thoughts?
Yeah, I mean, there's a lot of anticipation about when the rates come down, but the good news is that the anticipation is about when, not if. I think on this podcast we've been saying a long time February, and
Yeah.
I don't think my view has changed. Interestingly, that was mostly confirmed about a week ago when weaker GDP numbers came in. So we were kind of coasting and things were not so bad. And then bang, we got these bad GDP numbers. And the Aussie dollar's been in sort of free fall ever since on the anticipation that there
Yeah.
actually will be a rate cut.
Yeah.
Now, they're saying, some say February, some say anywhere between sort of February and let's say April will be the first cut. I mean, I broadly agree with that. Whether or not these unemployment numbers change that, the Aussie dollar's got a bit of a bounce, so that's it's good for consumers. But look, I still think that the story of rates being cut by 25 or maybe 50 basis points, but probably 25 basis points anywhere between February and April next year, I think that's still intact. Yeah.
Okay, cool.
I mean, we said this sort of off air, but the RBA has to cut because all the other central banks are cutting. So they're going to follow the ECB, the Bank of Japan, and the Federal Reserve, and they just don't need to do it at the same time as everyone else. And in fact, they're probably going to just do it with a 9-month delay after all the other countries because we started raising rates later.
Yeah.
So I think Q1 next year will be cutting rates.
There will be a delay, as we know, and it also comes down to the magnitude of it as well.
Yeah.
But I know that, the RBA is very, very keen on making sure that the underlying services inflation also is under control, which, the figures, unfortunately, at the moment doesn't look anywhere near what we wanted. So there's a chance that they could still continue to hold it out. But whether there's a political reason, because I think our election next year is federal election next year is around April, May, if I'm not mistaken.
Yeah,
I don't know whether there could be a bit of political reasons there too. Not
absolutely.
So we'll have to see. I think it's a good thing though. I mean, unemployment rate being low means people are still getting jobs, and that means people are still receiving income, and they're not going to go into hardships, especially with mortgage repayments and that kind of thing. So it's definitely a positive sign.
Yeah.
And who knows, this might be the actual miracle, that narrow path that the RBA has always insisted on walking and treading very carefully. They might be able to do, they might be able to play and do a magic this time without killing the economy too much. Who knows?
Yeah.
So
yeah, quite right.
Hopefully.
We'll
okay. See. All right. Well, here we go. So without any further ado, shall we just jump into our favorite parts of this podcast, which is
if we have to.
Come on, John, let's spice it up a bit.
Fair enough.
Okay, so last year on the 8th of December 2023, so around the same time as now when we're recording this podcast, around the 8th of December, we've made a number of predictions in terms of how 2024 is going to span out, okay, or how it's going to plan out. Now, both you and I made some predictions around the top performers. So, which cities is going to be the top performers, which city that we think is going to be the worst performer. We've spoken a bit, we touched a bit about, our expectations on Sydney growth in terms of its percentage. And we also talked a bit about our general, anything kind of highlights in terms of what we think is going to be the highlight for property investors for 2024. So to start off with, look, I'll do mine first, John. So, I'll give myself a hard time first, or you can give me a hard time first. Let's put it that way. So my top performer, not in any order, was Perth, Brisbane, and I think I chucked Adelaide in as well. Okay, so Perth, Brisbane, and Adelaide. Okay, all right. So let's have a look at. So how we're going to assess this? I'm just going to I pulled up the CoreLogic report for 2024. So this is up until basically 30th of November 2024. So basically the latest set of data in terms of where we can judge on this. So in order to verify or validate that, we look at the annual figures in terms of the change in dwelling value. So this is across both houses and units. Okay. So if we look at Brisbane, annually 12.1%.
Wow.
Pretty good. Adelaide, 14%.
Wow.
Very good. Perth, 21% annually. Stunning.
Very nice.
Stunning. Okay, so so I think I played the safe card. I think it was pretty clear last year around the time when we were doing it. Perth was already accelerating. Brisbane was accelerating. Adelaide was accelerating. These three cities are definitely going to be the top performers. I don't think there will be much doubt to that in that instance. So this is the safe card. Now, the worst performer I had was Darwin. So Darwin did an annual increase of 0.9%. So it didn't go backwards. And as a matter of fact, the worst performer as of 30th November is actually Melbourne, a minus 2.3% across 2024. So Melbourne continues to go backwards in this case, which is actually quite interesting, I got to say, because I think in my comments last year, I've already started saying that Melbourne should start to pick up. Should start to pick up, okay? We haven't really seen that reflected in the data yet. But I think one of my caveat that I said in terms of Melbourne last year was also to do with when the interest rate changes, because depending on the interest rate changes, now there has been no interest rate movements at all for 2024, okay? So that has played a big factor in terms of people looking at Melbourne. But having said that, I mean, anecdotally, just based on what my clients is currently buying, I'm starting to see that Melbourne, I'm starting to see a bit more Melbourne deals coming through in the last month or two. And also from my discussion with the buyer's agent who's buying in Melbourne, the lower end of the market is starting to move. Okay, it's starting to move. There is competition. There's property investors now eyeing that side of things, and property investors will miss out. There's multiple offers type of situation, that kind of stuff. So while Melbourne the numbers in Melbourne on here hasn't really reflected, but I think next year, especially coupled with interest rate reductions, whether that's 0.25, whether that's 0.5% reduction, I think Melbourne will definitely do a lot better than what they have shown this year. So
can I make an observation just to sort of reinforce what you've said? So Melbourne is the third cheapest capital city in Australia, and it's only more expensive than Hobart and Darwin. So Melbourne is cheaper than Brisbane, Adelaide, and Canberra.
Absolutely.
Insane.
It's insane.
This is what happened when you overtax land and you scare people away. Insane.
It's going to have to change at some point, though, right? Yeah. And that's why we don't think that there's bright prospects in terms of Melbourne. And I think our view still holds on that. This is more just a temporary status due to the fact there's a lot of headwinds against property investors who's looking at Melbourne at the moment, or Victoria in general.
Yeah.
So the other commentary that I made was in relation to Sydney. I was expecting a 5 to 10% growth, so slow and steady, nothing amazing. More closer to 5%, I think, was my conservative basis. And across 2024, Sydney has done an annual 3.3% growth. So not quite as what I expected, not as good as what I expected. But having said that, that was probably mainly because in the last quarter, John, you can definitely attest to this. Sydney market has significantly slowed down due to the number of stock that's available as well.
Yeah, and it's not in the data yet, so I think it's worse than 3%, but or it's below 3%, let's say.
Below 3%. Yeah. Okay. So I think in a nutshell, that's what I had last year. Basically, Brisbane, Adelaide, Perth, which all three capital cities have performed really, really well. So that's a tick. Worst performer, Darwin. No, didn't get that one right. Melbourne was the winner here for the worst performer. Melbourne expecting to be going up or rising. I mean, to a degree, yes, but not really reflected in the data. And Sydney around 5% growth annually. No, it didn't quite hit that either. So yeah, so it's a few. So
well done. I mean, that's really, really, really well done. Like you got much closer than me, and we'll go through that in a moment. But well done.
I took the safe approach, John, and because I know you being a contrarian, it wouldn't be so fun if you just picked the same thing as me.
Yeah,
so
that's true.
and I think you had the courtesy of letting me to choose last year. So this year you're going to go first later on.
Okay.
So at least you get the option to be able to choose, and then I'll tag along to see maybe I'll go with a bit of contrarian view on that.
You're being very kind, but yeah, all right. Yeah, well done. Shall I go? Just run through my picks. So
yep.
So I said Sydney was not in my top list, but I said Sydney would do 3 to 5%. So I think I got that right.
Yes, you do.
So that was probably where the good news ends, though. I think it's all downhill from there. So Sydney, I do get a tick because I said 3 to 5%. All right. My top performers, I said Melbourne and Perth.
Mm-hmm.
So like 1 out of 2, but I was very wrong on Melbourne. So, and we'll come back to why, I guess. The other thing I said was that the dark horse would be Darwin. I think that's a red cross. I think. I mean, I don't think I can claim any victory on the Darwin numbers. And I said the worst performer would be Adelaide. So what was I thinking? Yes, I was being a contrarian. So here's what I was thinking. I think I'm a year early.
You're a year early.
Yeah, and I think that I look at too many like long range charts. So the charts I'm looking at to get to this is essentially charts that go back to the 1970s, the gold to real estate ratio, the capital city ratio, and they're and I was a bit foolish to not acknowledge how slow those lines move. They're decades worth of data, and a little centimeter is like a long period of time. So. Melbourne is clearly the cheapest, but turning around in 2024 was too early. But look, there is a saying in Wall Street that if you're too early, that's the same as being wrong. So I think I unfortunately it comes under that for me. Like I think it was too early. Like if you take my advice and invest in Melbourne, you'll probably do quite well in 2025, maybe, but you would have lost 2.5%. In listening. So yeah. Timing is not unimportant.
That's on average though. It's not specific to each of the properties at the end of the day. So
now your observation about investors coming out of the woodwork starting to invest in Melbourne, particularly like the lower or middle quartile in terms of the lower types of properties. I think that's a very interesting observation. I would say that broadly speaking, that's true of Sydney as well. So a lot of parts of Sydney are still growing, but they aren't the expensive areas. The expensive areas did really, really well in 2021 and in 2023. And so I think that because they moved first, they're giving back some of the gains first.
Yes.
And the lower socioeconomic areas where there's a lot of infrastructure going, I think that they're still sort of holding up pretty well, which is why this is sort of the danger of medians, right? There's no median price in Melbourne. There's no median price in Sydney. There's so much variety, but we need to hang our hat on data sets. So well done to you, sir. I think that it's fair to say that you kicked my ass in the 2024 predictions. So let's see how we go for 2025.
Like I said, the other one I think you mentioned as well, John, which I know that because last year around this time, you're starting to see that the units are starting to outperform in that sense. So I think one of the things that you were expecting was that in 2024, units is actually going to be working out better than houses. So how did that translate in core logic number terms? So if we have a look at the report.
Oh yeah.
Now, so Sydney column is here. Houses annually 3.5%. Units annually 2.5%, basically. So it didn't quite outperform. But having said that, I reckon in about 3 months' time, their annual growth is probably going to be sitting at around equal to each other. So like again, you're just early in terms of that trend. Yeah. And so, it's not, and look, what they say in Wall Street is shares. It's different to properties. I think it's never a wrong thing to be early adopters, right? Like you can never, if we want to time things, we wouldn't be playing property. Like you'll be gambling in shares. You'll be investing in shares instead. But so I'm sure that people who took your advice in terms of getting into Melbourne property cycle early, in that case, they might not be as satisfied with the results so far, but then again, something to look forward to next year.
Yeah.
Again, so, and I guess coming back to Sydney units growth, and I think it still presents great opportunities to be buying in Sydney units at the moment. That's what it's saying right now. So, and another key important factor was that within our predictions, I think we've assumed there's going to be at least 1 or 2 rate drops. I think that was because at that point in time, remember, all the banks are kind of saying, yep, it's going to be, like rate drops left, right, center. All the major banks were predicting that 2024, at least 2 to 3 rate drops. Yeah. So on that basis, that's why I think we had that implied assumption at that point in time when we were making these predictions. But unfortunately, that didn't roll out. So it ended up being a fairly different year to what we were expecting.
That's true, isn't it? I mean, the Fed was saying 5 cuts by the end of the year.
Exactly. So anyway, it is what it is. And you also made the remark about 2024 will be actually a boring year, but you're not expecting a crash at all as well. Okay, so again, it's reasonable. And
that's fair enough. Yep.
We're not seeing crashes, anything. Certainly not in Sydney at the moment as well. But I think that's. I wonder whether you can apply that same logic to 2025.
Yeah, I mean, 2024 was an election year. I remember thinking they kind of keep the lid on the Vegemite jar during election years. Next year's an election year for us as well. So you kind of never know. Look, real estate isn't a volatile asset. I think we kind of micro analyze it, but it really isn't. It isn't that volatile. And on average, it does 6% a year. It's pretty boring, really. So predicting a boring year again isn't some amazing insight.
But when you look at Perth, look at that 21% on annually. That is a stellar growth, I've got to say.
Yeah.
But having said that, I reckon Perth has run a lot of the steam this year already. So I don't know how much it's going to go next year. So
let's have a chat. Let's
all right. Well, in that case, then, shall we look at doing our 2025 prediction then, John?
Yeah, let's do it.
I will let you take the honor of kicking it off.
I get to go first. So, I'm almost going to do the same picks, but almost. So, the number one pick for 2025 has got to be Melbourne. The thing is, it does need a political change or a sort of a policy change there, and I'm not close enough to know when that next election is. But it's just sometimes things just become so cheap that it doesn't matter what the land tax environment is. So I'm going to say Melbourne. So as the best, I'm going to say Sydney as well.
Sydney, okay.
You go, Sydney. I think Sydney and Melbourne do well when they're cutting rates, and I think that they probably won't cut as much as we want or hope or anticipate, but there'll be something next year. So I'm going to say Sydney and Melbourne as number one. Okay. Maybe number one and number two.
Sure.
Hang on. No, let me change that. Number one, Melbourne and Darwin.
Okay, Melbourne and Darwin,
and Sydney will be my dark horse.
Sydney will be your dark horse. Okay. And why Darwin?
Because it is so cheap. It's like median price of 400,000 or so, and it's not just cheap in absolute terms; it's cheap in relative terms as well. It's been languishing for a decade or so. I think it's starting to look good. I think yields are quite high there as well.
Yes, indeed.
So you can get quite good returns, and I think that there's such little risk from going into. There all sorts of things are going to happen to the property market next year, but the risk seems to be lowest in Darwin. So Darwin and Melbourne, and I'd say Sydney is a dark horse. Worst performers? This is always harder. Um, hmm, I'm going to say my worst performers will probably be. I mean, I want to say Perth. I
Okay.
want to say Perth and Adelaide. They're the two I want to say, but I don't know if the fundamentals are there yet. Um,
Mm.
I'll say Perth because
Okay.
I'll say Perth, and yeah, I'll say Perth, and I'll leave it there.
Is that
Yeah,
just
maybe
because
Adelaide.
the growth, you're expecting that the growth is pretty much coming to an end? The boom
I
cycle.
don't. Yeah, I don't think it's done, and I don't think it'll be negative. But it's just they can't do 25% 2 years in a row. It just
Printing the
needs
whole.
to digest the growth. So yeah,
Yeah.
so
But don't forget, as a worst performer, you could also go negative. So if you factor that in mind, would your pick is still going to be Perth?
yes, I'm going to stick with Perth as the worst performer,
Okay.
and I'll throw Adelaide in there as well.
Probably Adelaide. So,
Yeah,
okay, so
even though I think
Adelaide and Perth,
yeah,
basically.
yeah,
Okay.
yeah.
All right. Any other remarks in terms of, let's say Sydney? What do you think is going to happen next year in terms
House
of?
versus units. So Sydney, what do I think? Sydney, I think Sydney will be, I think somewhere between 4 and 7%.
4 and 7? Okay.
Yep. Um,
Still fairly strong. I mean, this year it's only done about 3.3, but
yeah,
we're now on a downward slide. If we did this 3 months ago, it's probably closer to 5%.
yeah. I think it's lost a lot of momentum.
Yes.
But I think 2024 was a bit of a lost year. So I
Yep.
think that they'll start cutting rates. I think that, and I don't think 4 to 7%, amazing. I think it's kind of average. Yeah, I think that they'll be 4 to 7%. So I think it'll pick up a little bit.
Mhm.
But look, I'm not expecting that to be in Q1. I think Q1 will be flat. Maybe it'll lose a 0.5% over that quarter, and then it'll resume after that. Now, the units versus houses question is an open question to me because usually when you're cutting rates, that's good for houses because they have lower yields.
Yes.
So if I have to be consistent, I'd have to say that houses will outperform units. But
In 2025.
yeah, but the ratios don't play that out. I'm going to say units will outperform houses.
Okay, so units will continue to outperform
Yeah.
houses in 2025.
Yeah, I think so. I think so.
Okay, good. All right. Any other observations, guesses that you want to?
No, I just hope we burn this episode after we record it, just so that it doesn't come back to haunt me in 12
Oh,
months'
it's going
time.
to come back next year. We're going to do the same thing again next year, John. So anyway, yeah. That's okay. That's okay. All right. Shall I take my
Up to
turn
you.
to make a bit
Go
of
for it.
predictions? Just for the fun of it. Okay, so 2025. Look, top performers. I reckon I agree with you on Melbourne, but I actually think that it might still be not as good as Brisbane in general, Queensland in general.
Okay.
Queensland in general.
Mm.
Melbourne will probably start moving once the red card starts putting in place. It will start to gain momentum once rate drops starts kicking. Now, why Brisbane or more broadly Queensland is probably more to do with the northern Queensland market, the Townsvilles, the Mackays, the Gladstone type of market. These markets at the moment are very favorable to property investors. You can still get affordability, get houses around 600, 700 or even less, and still get a really decent yield at the moment. And employment situation is improving as well in the northern Queensland aspects. So I actually think that 2025 northern Queensland regions is going to continue to perform,
Okay.
which is going to basically fed into the Brisbane numbers to a degree. Okay, so Brisbane have slowed down a little bit this year now. I'm saying with Perth as well. From what I'm hearing, it's kind of like the days on market isn't as quick isn't as fast as how they used to be earlier this year now. But I still think that, Melbourne and Brisbane were likely to be the two stellar performers in 2025. The worst performer, I actually think that Hobart would probably still be one of the worst performers out of them all.
Oh, very interesting. Okay.
Yeah, Hobart. I mean, Hobart's done a stellar job in the last few years, right? But now it's pretty much on a downward trend. Same thing as Canberra to a degree. But Canberra will probably start to pick up once rate drops comes in. Hobart is basically, the analogy is like, you just had a big buffet and now it takes time to recover as well.
Yeah.
Similar to I think I stole that one off you, John.
That's a good one. You can use it.
Copyright.
Yeah.
Bridge to bricks.
Yeah.
So so
all food analogies are good.
Yeah, I know.
Anything involving buffets. Yep.
So I think that's my punt. As the worst performer, I reckon Hobart might still be on a bit of a downward trend for at least for a number of years, or it's just going to stay flat pretty much. The income in general in Tasmania isn't as high. People are struggling to be able to afford it at the moment with the house prices being so high right now. So that trend is going to continue basically. So and a few percentage rate drops isn't going to change significantly in terms of their borrowing capacity there, unless their income significantly increases. But then again, I'm not seeing any major employment improvements in Tas, unfortunately. So I think that market is going to continue to struggle. I could be very wrong though. And I think I mentioned Melbourne's lower social demographic areas have started to move, right? So that's why I'm pretty keen on seeing how Melbourne's going to pan out. Because even in the current environment, with interest rate hasn't done any movements, the lower social demographic areas are starting to move, which means the property investors are starting to eye those areas. So I think Melbourne will have at least the bottom end of the market of Melbourne, houses in particular, is going to start to move. Because like you said, people are just going to realize how cheap and how much value they can get on those. So especially I think the west, the north, the northwest corridor, the north corridor, potentially a bit of a southwest corridor of Melbourne CBD. Because you can literally get like $600 or $1,000 about within 20 kilometers from Melbourne City for a house. I mean, it's a crappy house, but it's still sitting on a decent block of land. That's how much value you're currently in Melbourne. Yield doesn't stack up though. That's the only thing. So if cash flow isn't an issue, if you draw the same line in terms of Sydney, 20 kilometers west or 20 kilometers northwest, how much are property prices now? It's just you can't get 600K for that kind of stuff anymore. So yes, I'm bullish on that. The other one is regional Victoria in terms of other observations. Regional Victoria, I reckon, is actually started to be looked at favorably by property investors as well. Predominantly the Geelongs, the Bendigos, the Ballarats, because these traditionally are lower in terms of purchase price and they present better yield in Victoria in general. So for those people whose budget constraint still doesn't want to sacrifice too much of the yield, instead of looking at a Melbourne or house as the alternative, they'll be looking at the regional cities, the regional capital, the Ballarats, the Bendigos, the Geelong. So they present great opportunities as well for those people who want to look into the Melbourne market or the Victoria market in general. So Now I wasn't too sure about Darwin, John. I got to say, I'm not as I guess I'm not as optimistic as you are in that market, and that's mainly because I don't know about the employment situation there. One thing that holds me back in terms of why Darwin hasn't grown as much as Townsville, I think as a matter of fact, I think Darwin, I might be wrong, Darwin is actually smaller than Townsville, if I'm not mistaken, from a population perspective. So Townsville has done really well this year, Northern Queensland, mainly due to the employment, due to the mining, due to the different type of, industries that's available in that, whereas Darwin at the moment is still a bit of a sleeping giant, is the way I would describe it. And I don't know what's really missing in that ingredient. We both haven't looked into Darwin that closely. So, whilst I can see, yes, all the numbers does stack up, it's got great yield, affordability. In fact, I think I got one of my clients was buying in Darwin the other day. I had a look at the numbers and it was pretty close to 7% yield, which is amazing. But it's just such a small market that I don't know whether I'm definitive. If I'm parking my money, I probably wouldn't park it in Darwin at the moment.
Fair enough.
Look into it
me neither.
further. Okay, so that's why I haven't really put it in any of my lists. But having said that, I mean, I'm sure Darwin will move. The question is just when. And again, how long it's going to be there. Because I have a feeling that market might be a bit of a punt by property investors. In other words, get in, get out quick. that type of scenario.
Yeah. The thing with Darwin is it can move 20% next year and still only be worth $500,000, and you wouldn't even notice. So it's such a small, volatile market that and it's going to fly under the radar until it does a Perth, right? And then now everyone's talking about Perth. I think it'll be the same. I think it'll move 20, 30, 40%, and then we'll be talking about it. So
yeah, true. So it's a bit of a after fact kind of situation.
And it'll only, the median house then after this massive bull run will be $550,000, which is
nothing to brag about. But for anyone who's got into Darwin for a price, good on you, good on them, of course.
But we'll see. I've been wrong.
So we'll see next year. We'll do another judgment at that point. Perth, I think, was the only one that I haven't really touched on. Look, I think I haven't mentioned about Perth. I haven't categorized it into top performers or worst performers. I reckon it's going to be fairly mediocre next year. Like what you're saying, and I think when we do our gold to capital city charts next year, it's going to show that Perth is now starting to run out of steam. And I certainly don't see it being another 20% year. I reckon maybe anywhere between 5 to 10% is what's remaining to go for that market at the moment. So it's gone up too quickly, and it's not sustainable. In that instance. So fairly simple to see that. Sydney. So to wrap it up. What did you say yours was?
I said 4 to 7%. I think it's my dark horse.
Okay.
It hasn't really done much over the last 12 months.
Okay. All right. Sydney, looking in general, look, I think again, this is subject to like how many rate drops there is going to be next year as well. But it's just going to be a fairly average year for Sydney, I reckon, I suspect. The first half of the year is going to be pretty crap, basically, just like where we are right now. When rate starts to drop a little bit, 0.25%, maybe we'll spark a little bit of recovery in that sense. But I'm going to say maybe on the lower end, 3% rather than a
fair enough.
Okay, so that's my punt at the moment based on that. So
Yes, I think there's a lot of waiting and seeing in Sydney, and I think that there's I think people waiting to see what the RBA does, which I always think is a fairly silly thing to do, because you're going to buy an asset for 30 years and there's going to be 400 rate decisions in that time. Correct. So don't sweat it. But nonetheless, I think there's a lot of anticipation, and I think people have their finger over the trigger in Sydney in a way that I wouldn't have said a year ago. But we'll see.
And that's kind of in line with how busy your business is currently running as well, right?
Correct. Yeah, correct. It's
got a lot of
definitely
inquiries, got a lot of people wanting to buy in Sydney, but they are just getting themselves prepared when that right opportunity comes, which, I actually do agree. I think, smart investors or upgraders will be looking at this opportunity at the moment. There's a small window between now until the first rate drops comes. I think the first rate drop is not going to have a significant dent, but it's more of an intent. It's more of an intent in terms of that trend is being verified. Yes, we've kicked off the downward rate cycle, and that just basically changes more from a mentality perspective than anything material. So, there's a little window between now until the first rate drops in the Sydney market where the buyer actually has advantage to be able to negotiate and has stock options to be able to chosen from. So, so I actually think that, for anyone who's wanting to get into Sydney market, try to take advantage of this opportunity, because it's hard to come by. I got to say, it's difficult to come by, and especially when the rate drops cycle has started kicking off, it's going to be even more challenging afterwards. So
we'll see. Only one way to find out. That's to keep listening.
And to contact John.
Oh, God. David.
Make him busier. That's how we like it. Cool. All right. So I think that puts a wrap in terms of our 2025 predictions. We will. This recording is going to be on the internet forever, John. So sorry, your son's going to see it. He's going to say, "How wrong is my dad? Look, he's just
so embarrassed. So embarrassed." Yeah.
We'll see. On the contrary, it might be said, "Look, my dad's such a genius. He predicted back in 2024."
Yeah, we'll find out. I mean, I try to think of turning points, but we'll if I get 50%, I'll be pleased.
You do well. You do well. Anything else you want to add, John, in terms of next year?
No, just we'll be back. We'll do some really interesting stuff to kick off in Q1. We're going to do the capital cities again. We're going to do gold to real estate. So we're going to try to put some do some more analytics around the predictive tools, and we'll again we're going to come and we're going to tell you what we're seeing in the property market out on the field. So that stuff's always interesting. Stay with us, and we'll bring you some good stuff.
Absolutely, mate. All right. Well, on that note, look, I wish we wish everyone a Merry Christmas and Happy New Year. We'll be back around in January again. But yeah, have a safe Christmas and enjoy your holidays. And yeah, we'll see you guys again in 2025. John and David.